Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of November 13th through November 17th, where we'll talk about trade ideas and trading strategies. We'll do our market analysis, look at how the markets performed last week, look for opportunities, and identify some trade ideas and trading strategies to hopefully help you make money trading and succeed in your trading career. So let's get started. Welcome, Brian Moritz. Thank you for joining us in the live chat today. Glad to see you. Hope you're doing well. And yes, happy Veterans Day to all those veterans out there, and thank you for your service. So here's our Google document with our notes for part one of our weekly trading game plan for the trading week of November 13th through the 17th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. You can find a direct link to this Google document in the description box below. We keep all of our Google documents with our weekly trading game plan notes in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as the notes from previous weeks, and you can find a direct link to that Google Drive folder also in the description box below. Welcome, Easy Mike, MD, Ricky Kahn, Walter Lyons. Glad to see you all in the chat today. Hope you all had a good trading week, are doing well. So we'll start out, we'll see how the markets performed on Friday. We'll jump over to the homepage of FinViz. We see the markets all had an exuberant rally on Friday. After Thursday was a little bit down on Fed Chair Powell's comments that they may have to hike rates further to get the inflation down to their 2% target, which, we've been saying for a long time. The Fed's been telling us they may have to do some more rate hikes, but the markets reacted negatively on Thursday to that, as we'll see in the indices. And then on Friday, we got a relief rally, exuberant rally. We can see the NASDAQ was up over 2%, Dow up over almost 1.2%, and the S&P up 1.5%. Got 68% advancers, 27% decliners, 28% new highs, 72% new lows. We've now got 42% above their 50-day moving average, still 58% below. And we only have 32%, 33% above their 200-day and about 67% below. So even though it was an exuberant rally, it's pretty split, bullish, bearishness. Again, we see the Magnificent Seven, the FANGs, the mega cap techs were really what's driving the indices up, although, almost everything was in the green on Friday, so it was a broad, exuberant rally. But again, the Magnificent Seven, the mega cap techs are driving the indices. Welcome, The Crow. Thank you for joining us. Glad to see you as well. So just some quick news. We also got a downgrade on U.S. credit late on Friday, so that may be a negative factor going into Monday. So we might see a correction, a little bit of a retracement on Monday due in part to that, as well as other global events. Look at the futures. We saw oil break down below 80. It's now pretty range bound between 75 and 80. We'll see that in the futures as well. Natural gas really broke down from the 340s down to test the $3 level. And again, we'll see that again in the futures. So I expect, a bounce back in natural gas. Again, gold also broke down below that 1950 level. We'll see in the futures. I expect it to retest and regain the 1950, although that will provide some resistance. Again, all the indices right now, the futures are pointing, strongly up. Saw the DXYs. We'll see the US dollar is kind of sitting between 105 and 106. Euros between like 106 and 107. We did see the Treasury yields break down to about 4.5. And then they bounced back on Thursday and Friday after Powell's comments. There was an auction, I think it was a 30-year auction, where the yields were about 4.5 something. We also see a slight inversion again in the yield curve. So it had de-inverted, still pretty flat, but we do see a slight inversion between the 5s and 10s. So we'll look at the groups and the industries as well. Actually, I'll look at the indices themselves first. We'll look at the SPY. So again, Thursday, we see that negative reaction to Powell's comments about further rate hikes. And then Friday, exuberant relief rally. You can see it's, hugging that near-term moving average. We've got an upper overhead support. We did break above the recent high, so it looks like we're hopefully going to make a higher high. We go out a little bit farther. Again, we broke the previous high, so broke through that moving average. So again, the opportunity to go for a higher high and continue that seasonal uptrend that we've been talking about. Although again, I wouldn't, with the exuberant run we had on Friday, I wouldn't be surprised if we got a slight correction, possibly early in the week, possibly on Monday, in part due to that Moody's downgrade. Similarly, again, Qs, the NASDAQ, again, very strong rally, broke above the previous high, broke above the moving average. So again, going to test the previous high at, about 380 or so. So we'll see again if we can make a higher high. Again, I expect a little bit of a correction retracement and then a push back up to test the previous high. Again, seasonal trend upward. Dow. Again, very, very strong rally. Again, just broke above the moving average, the near-term moving average on the weekly. So again, broke the previous high and, got plenty of room to test the previous high going back a ways. So again, I expect, a seasonal strong rally going into the end of the year with some correction. The Russell did not participate as strongly in the exuberant rally on Friday. We saw, strong decline. Got a bounce last week in the Russell, a bit of a correction in the Russell this week. I look at the daily. Again, it participated a little bit, but not nearly as strongly as the SPY, NASDAQ, and Dow. So the Russell is definitely weaker, strong downtrend. In the Russell, got another gap to fill below. So, I think there's significant risk that the Russell is going to correct down, gap fill down to that previous low. And we can see that on the weekly. Got a tweezer top, strong correction. So again, I think there's a significant weakness in the small caps and the Russell. Look at the VIX. Again, the VIX just steeply declined. And it's showing here in the futures about 16, but I believe the actual are in the 15s. I believe the actual VIX, the lowest I saw, was now in the 14s. So again, not a lot of fear out there, even with the a little bit of a retracement on the Powell comment. Did not generate a lot of fear into the VIX, not a lot of volatility. Now, we do have some economic data coming up this week. We'll talk about the CPI, the PPI, and jobless data that might cause a little bit of a pop in the VIX. But again, all the pops have pretty much retraced very quickly. Okay, now let me grab a quick drink and we'll talk about the sectors and industries, see if we can identify some opportunities there. I see several of you are talking about the upcoming U.S.-China talks in the comments from Yellen meeting with her counterpart in China, possibly some stabilization in the China relations. So again, we'll see in the ETFs, etc. We might get a little bit of a positive bounce in the China, some of the China ETFs. So in terms of sectors from Friday, everything was pretty much in the green. Again, technology, communication services. Again, I think that's mostly attributable to the Magnificent Seven. Amazon, I think maybe some of the others are in communication. Most of them are in technology. The weakest was utilities, consumer defensive. So, again, Friday was very much a risk on. Exuberant rally, particularly in technology. See, energy even made a little bit of a boost for the week. However, energy was the worst performer. Again, we saw oil break down, and then we also had utilities and real estate. A little bit surprising as we did see the yields go down a little bit. So those are typically positive for those sectors. Basic materials pretty negative. We'll see gold and silver got beat up pretty severely. For the month, again, the month is pretty defensive. We've got defensives, utilities, and then technology. Again, the weakest is energy, healthcare, real estate. For the quarter, again, real estate, utilities, energy's just slightly negative. But again, the strongest sector is technology, communication services, mostly the Magnificent Seven mega cap techs. Look at the industries. Again, we see semiconductors very positive. We'll see some oil. Got a little bit of a rebound in oil on Friday. Mostly technology, internet retail. The weakest. Again, silver and gold. Agricultural inputs for the week. And semiconductors strong. Software, technology. Again, the weakest, REITs, real estate. So the REITs, rolled over after we had that run last week and earlier in the week. The REITs rolled over. Again, silver and gold, very underperformed. Solar, very negative in general, although even Friday we saw a little bit of a run in solar. Uranium's been generally strong, even with the decline in energy. Uranium continues to be relatively strong. Again, for the month, got energy pretty negative, REITs pretty negative, solar extremely negative. Again, uranium strong for the quarter, energy not quite as weak. Again, REITs pretty weak for the quarter. And again, silver and gold, aluminum, and solar very much so. Welcome, Flip of the Shippa. Thank you for joining us. Hope you've been doing well. Okay, so we'll jump over to investing.com. We'll look at the economic data from the past week and then see the upcoming economic data for next week. So from the past week, again, we had some bond auctions, a little bit. These were pretty good, better than previously. We've got Fed officials continuing to talk, so you'll get some volatility, whether they're projecting rate hikes or not. Again, just they'll oscillate based on who's talking, what they're saying. I expect the overall message, they're going to get inflation down to 2%, might require further rate hikes. I think that'll be consistent. See, crude oil stocks were up. So again, we saw that decline in oil. Mortgage rates drop. Again, we saw the 10-year TLT when, the yields went down. So I expect, there's probably a surge into getting mortgages while the rates were down. When we look at treasuries, I'll talk about my thesis in terms of where I think treasuries are going to go, TLT, etc. Jobless claims continues to creep up just a little bit. Initial was just slightly above expectations, but again, not dramatically negative and below the previous numbers. So again, not negative. The average continues to creep up a little bit. So again, we see the job market has been resilient, but just slowly creeping up in terms of jobless claims, but not something again the Fed needs to worry about. We see some bill auctions. Here's the 30-year bond. So it was a little bit better than previous. And again, we saw bond yields drop on that. We also got in the Michigan consumer sentiment. So their inflation expectations 1 year was significantly higher than expected. So that's kind of a negative. It's something that, the Fed is watching. 5-year was again slightly above expectations, but not as dramatic. Consumer overall expectations a little bit more negative than expected. So again, the consumer's outlook on the economy is a little more negative than it has been and a little bit more negative than expectations. So that might be a little bit of a concern. We saw the rig counts continuing now to drop just slightly. And again, you would expect that would decrease supply, drive or at least hold oil prices up, if not drive them up, but we didn't really see much of a reaction. Welcome, Alan Krantz. Glad to see you. Hope you're doing well. We'll look at the economic data coming up for next week. So we've got an OPEC report. We'll see if they say anything. There was a news item that talked that the Saudis may continue to extend their cuts, but I didn't hear anything of increasing their cuts. So we'll get oil inventories, gas inventories, some bill auctions, more Fed speakers talking, and then the important points will be the CPI. This will be very closely watched. If this comes in higher than expectations, expect a negative reaction to that. So Tuesday we get CPI, again very important input to the Fed's interest rate decisions. Then on Wednesday we get PPI. So again, we get consumer inflationary data on Tuesday, then producer on Wednesday. And again, if this continues to be above expectations, we could expect, negative reaction from the market due to that. Mortgage rates, I expect, interest rates did bounce up a little bit. So, but the mortgage rates are now below 8%. So we also get retail sales for October. The last retail sales was better than expected. So if we continue to see better than expected retail sales, that bodes well for retail, particularly going into the holidays. So we've talked about that seasonal trend as a strategy going forward. Thursday, we get some jobless claims data, import exports, some housing data, again, more Fed officials. And we get some housing and building data, and this is again for October. So this isn't going to show the recent decrease in mortgage rates. This will be for October, probably come in pretty much in line. Okay, we're still also in the heart of earnings season. Most of the Magnificent Seven, most of your mega cap, tech, etc., have already reported, but there's still tons of smaller companies in various industries still reporting. So again, you can quickly access the full earnings calendar in investing.com. Again, we still got tons of companies reporting in various industries. So I would highly recommend that you take a look and see if there's something in a stock you're watching or interested in buying. When are they reporting earnings? And then we have videos that talk about how to play earnings, how to trade around, how to make money trading when earnings matter, and earnings definitely matter. Anyone that misses is getting severely beaten. beaten down, and even if they meet or beat a little bit, the guidance going forward is very important. So again, it's worth listening to anyone who you might be interested in trading or in the same sector. So again, sentiment moves in the same sector. So again, earnings definitely matter, and we still got a ton of earnings coming up. And then I believe NVIDIA is on the 21st, right before Thanksgiving. So many people are waiting to see, what NVIDIA reports. Although, again, my opinion, they have a tendency to beat and raise guidance, and their demand for their GPUs is still very high, even though there's a restriction in China. I heard that Microsoft is actually licensing Oracle Cloud capability because they can't get the NVIDIA GPUs to fill out their data center. So again, I expect that demand from China that's being restricted from China to be scooped up by U.S. cloud providers. So I don't see that as a major impact for NVIDIA. Just a reminder, this upcoming Friday is options expiration, OPEX for November. So if you've got any options, this, in the past, this OPEX dates tend to cause more volatility. We haven't seen quite the dramatic volatility on OPEX as we used to see, but this probably will cause a little bit of volatility. And then the next Fed meeting is the 12th and 13th of December. So we've got, again, still some time. I believe the probabilities, and we'll look at them again as we get closer, and all this economic data will cause the probabilities of an interest hike in December and going forward to oscillate. But I believe the probability right now is, again, for a hold. So, okay. So let me grab another quick drink and let's jump over and look at the market screen on Weeble. Let me check the chat, see what's going on there. And then again, we'll look at the market screen in Weeble as well. Another place we can see a near-term earnings calendar. Just a quick reminder, if you're not already using Weeble, you can see you can get, right now they're offering 6 free stocks if you open and fund an account. They also offer 5% interest on your uninvested cash in your cash account. Again, as you see, we use Weeble for our market analysis, our due diligence, our trading. So again, we highly recommend Weeble and we use it. And if you would use our affiliate link in the description box below, you can get your free stocks. You can always cash them out if you don't want to use the platform. They're coming out with some new features as well in the browser version of Weeble that's very nice. And if we get some time, possibly tomorrow or in upcoming live streams or videos, we can go over some of the new features, one of which is the options trader in the online browser version of Weeble. So here's the market screen of Weeble. Again, this is the online browser version. We see the advancers and decliners from Friday. Again, majority of advancers, 36 to 21, but the percentage of advancement was, again, generally very small. Declines very small, quite a few unchanged. Net inflow, again, as we have been seeing, the inflow in the NYSE on Friday has been much stronger than the NASDAQ, but we do see a positive inflow in the NASDAQ increasing towards the end of the day. So past several weeks, we've seen outflows out of the NASDAQ on Friday. So here we're seeing an inflow, although, again, in my humble opinion, None of this is financial advice. We're not financial advisors. Um, but I think that the exuberant run in the Magnificent Seven, I think we'll see some profit taking and some money flow back out of the Magnificent Seven and go elsewhere. And we'll see, we'll look for opportunities in the futures where we think that money might go in the very near term. But I expect a continued oscillation in and out of the Magnificent Seven. So we'll see that strong tech surge and then, profit taking. Another quick note, again, in the calendar section in the market screen in Weeble, you can see the very near-term earnings calendar. Again, a little bit easier to see the near-term versus the long list in investing.com. So you can see who's coming up before market open, after market close, or if it's during the market hours. So you see Fisker, So look at the best performing industries for the week. So we see semiconductors, again, software, so technology, construction somewhat positive. Again, uranium, some positive, aerospace and defense. Again, most of these are, pretty split, so just a slight positivity. Home building a little positive, transport a little positive, retail positive. So again, a trend we've been talking about. So, Amazon. Look at the ETFs. So for the market, so up on the NASDAQ, this leveraged ETF long on the NASDAQ, leveraged ETF long on S&P, so up on the S&P and NASDAQ, again up, mid caps, ultra on up on mid caps, up on the Dow, again up on the S&P, mid caps. As you can see, we don't see small caps there, we see mid caps. Short the VIX. So again, downtrending, retracement in the VIX. So this is long the Russell, long small caps. So again, we don't see that in the S&P. We just see that in the Russell. We've got long China and long Europe. For industries, semiconductors, industrials, again, most of them are going to be strong. Utilities a little negative, energy a little negative, basic materials a little negative, healthcare a little negative, and defensive. So again, as we saw in FinViz, almost everything in the green, utilities, defensive. Again, we had a risk on day on Friday. So commodities got carbon offsets, energy, oil. So again, playing a rebound in oil. We'll see that again and talk about it in the future. So again, rebound in oil. We've got high yield, investment grade, and 25 very long dated treasuries. We'll see, most of the foreign currencies, with the exception of the yen, have made a little bit of a recovery versus the dollar. So again, we'll see that in the futures as well. Okay, so let's jump over and we'll look at the futures, look for opportunities, again, trade ideas, strategies that we can play for next week, identifying opportunities in the futures. So again, we see all the indices ran up. It looked like they were going to get rejected from their previous high. And then we got that exuberant push on Friday. So Thursday, it looked like they were all going to get rejected from their previous high. And again, Friday, we had that exuberant push up above the previous high. So all the major indices pretty much broke above their previous high. So now, they're making a higher low. Go for a higher high. So again, we're seeing that seasonal upward trend after we got out of October. November's been generally upward, generally positive. Somewhat of the exception is the Russell. It didn't make a new high, and then it got rejected and is retracing down. So again, some weakness in the Russell. We'll see if it makes a higher low here and retests the previous high, or if it's going to break down. Again, weakness in the small caps. See the European stock markets, recovered also very similarly. Nikkei very similar, so they're kind of following suit with the American markets as well. See that steep retracement in the VIX. Got the little bit of a pop on Fed Chair Powell's comment, and then it very quickly retraced back down. Okay, we saw that dramatic breakdown in oil down below 80. Tested 75. Now it's bouncing off 75. Again, my humble opinion, not financial advice. I'll put our banner up with our disclaimer. But I think, oil's going to be range bound between 75 and 80 right now. But I think we'll get a bounce in oil. Also, same thing with natural gas. We see this kind of a very similar pattern. We saw October into early November. Then we got the gap up. Now we're getting that, retracement back down to the previous, support level where it looped up before. So right now it's range bound between about 3 and 360 or 3 and 340. So I expect another, swing back up in natural gas as well. We'll see in the ETFs, various ETFs you can play oil, natural gas, but I'll throw those out now as well as long oil, drip, or UCO, where long is gush or UCO, short is drip or SCO, natural gas long is boil, short is cold. Again, you can trade them, day trade them, short-term scalp them. But again, I expect a swing back up in oil and natural gas. The seasonal trend should be up. Again, we saw gold just break above 2,000, then get rejected. This looks like it's coming down. Broke down a little bit below 1950. Looks like we'll retest that previous support level, and then again the longer term trend I think is going to be up. So again, we'll see in our ETF Google sheet there's a number of ETFs you can trade. This bounce short-term trade, day trade, gold and silver is also swing trading gold. And again, I expect it'll probably retest that 1950, and then we'll take a swing back up and retest 2000. Silver's got a little bit farther to go to retest that 22 level, so I kind of expect it to continue to decline to that 22 level, and then again expect a bounce back up in silver. Platinum, palladium's making a new low, so it really dropped off, making a long-term low. If you're interested in trying to play this with an ETF, there's an ETF to play long palladium, PALL. It's kind of low float, volatile, so I've kind of stayed away from that. But again, with this extreme move, if you want to try to play that for a bounce in palladium, PALL is an ETF that you can use. Corn, again, looks like it's dropping off and testing the recent lows. There is an ETF long corn. Risk reward's not that great in the near term. Also, tomorrow we'll talk about wheat as well. We were long wheat. We got shaken out on that slight decline. Looked like it was going to roll over. We got stopped out there, and then it surged up. and then retrace back down. So we'll be looking for another opportunity to trade wheat. And there's an ETF we use, WEAT, that we'll see to trade wheat. We'll see if we get a further retracement back down or if it's just gonna head back up. Again, the treasuries, we saw they were running up, had a strong surge last week in the treasury prices. Yields dropped. Again, the 10-year got down to 4.5 something. And then we got the comments from Powell, and the treasury prices went down and yields recovered slightly. My humble opinion, I think we're going to get a retest of the TLT, the 10-year yield back at 5% at some point. This may be the time it retests. It may be when we get the next Fed interest rate decision. Although, again, the probability is that they're going to hold pat unless the inflation data comes in hotter than expected. But again, my humble opinion, I expect yields, the 10-year TLT yield to retest 5. So we'll get a retracement and then, a possible resumption of the price trend back up. I believe, Easy Mike was talking about some of the ETFs you can play, and we'll see those in our Google Sheet as well, where you can long or short treasuries. Again, dollar's been kind of range bound between 105, 106 lately. Another interesting observation I saw is normally when the dollar weakens, commodities, dollar-denominated commodities get a pop, gold, silver, oil, etc. Gold and silver have not been reacting as they typically do to the DXY, to the US dollar. So even when the dollar was declining, gold and silver were declining. I thought that was a little unusual. And then when dollar strengthen, that does cause a decline in dollar-denominated commodities. But it's interesting that correlation seems to have recently broken down some. Again, we see the Japanese yen's, multi-decade low. We do have some ETFs. You can long the yen. Again, the risk reward isn't that great. If you're a Forex trader, again, you can see that multi-year low in the yen. Other foreign currencies did recover some and then dropped off again, as we saw the dollar dropped off and then re-strengthened. So I hope that all helps. And Alan Krantz says he also seen, I assume you're referring to the breakdown in the correlation between the DXY and some of the commodities. Okay, let me grab a drink and I'll bring up our ETF Google Sheet. So if there are particular indices, commodities, topics that you want to look at, ETFs, identifying ETFs to trade long or short, we can look at those in our ETF Google Sheet. Let me grab a drink and we'll look at our ETFs. Okay, just a quick reminder, if you'd like to get access to this Google Sheet with all of our ETFs in it, you can get 24/7 access to this Google Sheet as well as our dividend payers, our puts ROIC Google Sheets by joining our Patreon at the all access or VIP level. Again, that will give you 24/7 access to all of our Google Sheets. You can use these to help, at least the ETF one, to help you identify ETFs to long or short, various indices, commodities, topics, etc. Just a quick note, I found one that's no longer active that we've removed. So if I see these that aren't trading anymore, I remove this China Biopharma as it's no longer active. I see several people are saying they shorted gold with dust. So if I just quickly look at gold, some of the ETFs you can use for gold, dust is one of them. Another one the Crow pointed out recently is GDXD. So you can see this is a inverse leverage. So it's a short leverage on gold miners. So you can compare the risk reward profiles of GDXD versus dust. Again, they're both, this is a 2x on inverse on miners, is a 3x. So again, you can pick the one that has the risk reward profile that you like. Again, those are both on miners. There's also GLL, so that's another one on gold itself. So if you're looking to short gold, those are several options. Longing, we like GDXU, so again, long on gold miners. There's also this ETN we hold. It's a monthly dividend payer on gold long. You can also see JNUG is a junior gold miners long. So again, several you can choose from. There's also another double short ETN on gold. So again, you can pick the one that has the risk reward profile that's most attractive to you at this time. Oh, we're talking about gold. Similarly, silver. I mentioned PALL on palladium, so you can see it's at a 52-week low. You can see the 52-week risk reward profile. Again, I find that one too difficult to trade. It's choppy. It gaps down, gaps up. So I tried several times and didn't have any luck. So I've pretty much given up on trading PALL. You can see also PPLT is a long on platinum. Silver, again, we've got some, the short on silver is an inverse 2x ZSL. The long on silver that we like is AGQ. Also got SILJ as a long on silver miners. SLVO is a dividend payer on silver that we have a sizable position in. So again, we hold that, collect the dividends, and wait for silver to go back up over 24, 25. So it's a long-term hold. So if anybody else has another category you want to look at, I'm going to look at the screeners. So we'll look at the technology components. So again, you can find a breakdown of the major technology components in the screeners tab. I thought this was quite interesting as we see this strong breakout of the FANG U. So FANG U is long, leveraged long on the FANG stock. So we see that very dramatic, strong breakout, broke out of that downwardly trending channel, broke out above the moving average. I would expect a retracement and a test of that moving average, but again, a strong breakout, made a new high out of the FANG U, so I expect them to be generally uptrending now, strong. Same thing with semiconductors. Again, very dramatic breakout on late in the week. Broke out of that channel, broke above the moving average. So again, a lot of strength right now in FANG U and SOXL. Although again, I would expect a retracement and then uptrending. Particularly if NVIDIA does report well, I think that'll reverse the trend in semiconductors. Similarly with the NASDAQ overall, TQQQ, but not quite as exuberant as it's a broader. But you see biotech didn't get that strong breakout. So again, a lot of weakness still in biotech, downtrending. It did go up and test that upper trend line and then rolled over. So we didn't see, again, that exuberant rally in biotech. So again, strength in FANGs, semiconductors, NASDAQ, but not in biotech. Had some, strength in Bitcoin. Bitcoin's been going up. So we've got there's a couple longs in Bitcoin, cryptocurrency. We own Block, BLOK, which is cryptocurrency in general. There's also BITQ. We talked about China. So we talked about the upcoming talks between Biden and Xi. Again, we typically point out you can long China with yen, short China with yang, and these are leveraged ETFs. Very, you can short-term trade one of these almost every day and make some money if you're nimble. Again, we have several others with different categories if you would like to choose, other categories for longing or shorting China. Japan. So if you want to, trade, we have several for the various emerging markets. This is on the Nikkei itself. Another interesting is the lithium. Been very negative sentiment lately in lithium due to decreased adoption of EVs. So those have been coming back down. Again, natural gas, long boil, short cold. Again, we saw natural gas drop pretty quickly down to 3. Again, if you're nimble, you can make good money on scalping, day trading natural gas with boil or cold. Just they are volatile, so be careful. You can also use UNG, UNL. Talked about oil, short with drip or SCO, long with gush or UCO. If you want to hold oil, collect a monthly dividend, USOI. If oil does continue to drop down below 70 or so, we will typically look at longing oil with USOI. Potash, Easy Mike often asks us to look at potash. We can see it's not really close to its 52-week low yet. Agricultural inputs, we talked about that, I think, last week. Generally, I think the sentiment there right now seasonally is negative. Talked about real estate. So we've been watching DRN, which is long on real estate. Again, we saw those get beaten down pretty severely this week. So you can short real estate with a leveraged ETF DRV, long with DRN. It's also REM. So you can see the risk reward profiles of those. Again, if you want to, short-term trade real estate, again, we think, we're waiting for a longer-term swing back up. We're also looking, and we bought and sold several REITs, and we'll talk about those again tomorrow. Talked about the trend in retail. So RETL. Talked about semiconductors. So if you're looking to long semiconductors, SOXL, short SOXS, or SSG for a short. Talked about silver. Solar's just been beaten down. So these are making, frequently making new 52-week lows. Somebody mentioned TECL the other day. This is another way to play technology. This is a leveraged ETF to play technology. So you can see the risk reward profiles of that TECL. I think there may be a short on that as well. Not sure if it's TECS or exactly what the short would be, the inverse of that. So we talked about treasuries as well. So we saw, the volatility in the treasuries, in part based on Powell's comments. So here's the base TLT. You can long, leveraged long is TMF, or there's other durations. So we have ETFs to identify longing and shorting different durations. Shorting the 20-year, you can use TBT. I know Easy Mike tends to use TBT. You can use TMV. So you can see the difference in the risk reward profiles of those. The US dollar. Talked about the yens. So you can see there's a couple. There's a long on the yen. There's another long on the yen. Again, the risk reward profile I don't think is all that generally great for a swing trade, but you can see right now the risk is very low. It's making new 52-week new multi-decade lows. So if you want to try to trade a swing in the rebound in the yen, here's a YCL or FXY, short in the yen, YCS. So if anyone else, if I missed your ticker or your comment in the chat, please throw it back up. I apologize if I missed it. I see Easy Mike's mentioning retail, XRT. I think we talked about retail. So RETL for longing on retail. There's also kind of more online focused click CLIX or ONLN. Again, all longing retail. And we'll look at RETL again tomorrow. Okay, so we'll quickly talk about our additional trade ideas, additional strategies, etc. Grab a quick drink. Okay, you can find, we've been talking, for several weeks about how to make money trading in November. So we have several videos, a couple shorts on how the markets typically perform, best performing sectors and industries. We have our previous video that goes into more depth about how to make money trading in November and also how to make money trading during Thanksgiving week. So you can access all of those videos about how to make money trading in November via the links in our notes. You can also find them all on our BeachBum trading channel. Also the seasonal trend for the fall. So very similarly, how does the market typically perform in the fall? Best performing sectors and industries, and our previous thesis on some trade ideas and strategies for making money trading in the fall. So we won't reiterate those. Again, as I mentioned with the mega cap techs, the Magnificent Seven, I expect sector rotations. We saw energy get beaten down recently. I expect, in my opinion, again, a rotation back into energy. So in my opinion, a bounce in oil and natural gas. Again, seasonally, those tend to uptrend in the fall, winter, colder months. Again, I think we'll see profit taking in the Magnificent Seven, the FANGs short term, and then towards the end of the year, we'll talk about what they call window dressing, where fund managers, etc., they want to have things on their books that make them look good, and I think we'll see a rotation back into the Magnificent Seven, back into the FANGs towards the end of the year. So again, we'll talk more about some of the Santa rally, tax loss selling, window dressing as we get closer to the end of the year. Again, you can hear more once we get into Thanksgiving week, some of the typical trends and how to make money during Thanksgiving week via a previous video as well. But again, I would focus on right now sector rotation, again, in and out of technology, risk on, risk off. And you see communication services and technology when they go risk on into technology, and then they'll profit take and rotate probably into energy, possibly into the defensives, utilities, consumer defensives, when it's a risk off day. And again, the overall uptrend into the end of the year, we may be pretty flat, but again, the historical trend tends to be up into the end of the year. So again, I expect some chop. Well, we could be pretty flat again. We'll get some chop, some sector rotation. Again, plenty of ways to make money trading in any environment like that. So tomorrow we'll also talk about dividend payers. We'll talk about our option strategies and also our top swing trading stocks to watch in part 2 tomorrow. So we'll take all this data and we'll select our top swing trading stocks to watch, stocks to put in our bullpen, our shopping list, and also additional trade ideas and trading strategies. So if I missed your question or comment in the live chat today, please put it in the comments under this video. I hope that you like this content. Please let us know how we can make improvements to our weekly trading game plans, any of our videos, any of our tools, our Google Sheets, etc., our systems, etc., to add more value for all of our fellow BeachBum traders. You can also contact us in our Discord. Our Discord is free to join. You can find a free invite to our Discord in the description box below. Also on our homepage, beachbumtrading.com, bum without the U. And you can find in the links section, and you can find ways you can also contact us via any of our social media sites as well, also in the links section on our homepage. So again, if I missed your question or comment you'd like me to cover something tomorrow in our part 2 or in a future weekly trading game plan, please contact us in one of those manners and we'll do what we can to cover that. So we hope that this all helps, and we hope you all will come back for part 2 of our weekly trading game plan for the trading week of November 13th through November 17th tomorrow. Again, we'll apply these trade ideas and trading strategies to select our top swing trading stocks to watch, stocks in our bullpen, shopping list, etc. Again, 10 a.m. on Sundays, we do part 2. 10 a.m. on Saturdays, we do part 1. And again, we hope this all helps. And we hope that you'll share this. We hope you'll smash the like button, help the YouTube algorithm, share this with more traders around the world. Let's keep building our community. As you can see, we've got a great group of traders in the chat, sharing additional trade ideas and strategies, and helping each other make money trading and succeed in your trading career, which is our goal. So thank you all again for watching, for participating, and we hope to see you all again for part 2 tomorrow. Thank you.